Gold is keeping its range intact around $5,000. Volatility is compressing, liquidity is thin. Friday's US GDP could unleash a move of $200 to $300 in hours. Markets are pricing in higher for longer, but gold isn't breaking yet. The question now, does GDP ignite the breakout? Let's map the exact levels that could define this move. Gold has been trapped between two Fibo levels that we can clearly see on the daily chart. Safe haven flows keep the bright metal supported as US-Iran geopolitical tensions continue, and any fresh headlines coming from diplomatic talks in Geneva could seriously impact the current gold price scenario. If geopolitics stay quiet, the US GDP data released together with the PCE inflation and just before the US PMIs on Friday could be the key catalyst for the next big move in gold. Let me explain the fundamentals and the technical drivers. The question is, will the US data help scale back Federal Reserve rate cut bets? Gold tends to benefit in a low interest rate environment. Let's look at the recent fundamentals. The bright metal is struggling to find a clear direction amid uncertainty over the scope and timing of the future Fed rate cuts. Slowing inflation and a stable labour market make a perfect case for the Fed to hold rates higher for longer. The January Fed minutes that were released this week also endorse this view, suggesting the Fed officials are in no rush to lower interest rates. However, markets continue to price in between 50 and 75 basis points of cuts this year, and that's according to the CME Group's FedWatch tool. So this discrepancy could move gold price lower if Friday's US data surprises to the upside. The US economy is expected to have expanded at an annualized rate of 3% in the final quarter of 2025. That's down sharply from a 4.4% growth in Q3. Meanwhile, the Fed's preferred inflation measure, the PCE, which is the Personal Consumption Expenditure Price Index, will also be released at the same time. The core PCE inflation is expected to tick higher to 2.9% in December from the 2.8% in November. Note that inflation remains well above the Fed's target of 2%, which for now limits the Fed's urgency to cut interest rates. So the real question is, what are the critical levels to watch out for while trading gold on Friday's US data? Here are the two main scenarios you should focus on. A higher than expected rise in GDP combined with hot PCE inflation could revive inflation concerns, and this would prompt the Fed to keep its wait and see stance for longer. This could also support the US dollar recovery, fueling a downside break in gold towards the 38.2% Fibo support, which is located at 4,859. Failure to defend that level will accelerate the downward trend towards 4,685 confluence support of the 50-day SMA and the 23.6% Fibo. On the other hand, a downside surprise in the GDP alongside cooling inflation could bolster bets for more than 2 Fed rate cuts this year. In this case, the dollar would come under renewed selling pressure, lifting gold back towards the golden ratio, which is the 61.8% Fibo resistance at $5,142. To summarize, gold remains range bound around $5,000 while markets scrutinize the US-Iran nuclear talks and debate the Fed rate higher for longer stance. Friday's US GDP and inflation data could reset rate cut expectations, driving a decisive breakout or sell-off, with key Fibo levels defining the battleground. Do you think gold breaks above $5,142 or drops towards $4,859? Comment your bias below.